Today is April 26, 2:36 p.m. We detected unusual options on Roku, ROKU. And so keep in mind, earnings is going to be reported after hours today. So this looks like earnings trade. So in this video, we are going to first identify these unusual options, and then we will analyze them. And then finally, we will use that analysis to set up a trade and show you what we had done for these unusual options. So without further ado, let's get right to it. Today at 1:58, you'll see this is actually just about 40 minutes ago. So make sure you have that bell icon to notify you whenever we see these unusual options. You see these 1,299 of them here. These are expiring the day after tomorrow, and so definitely an earnings trade. You'll see this here at you also see these 70 strike calls here, but let's focus on that vertical call spread, and you'll see here at that 60 strike right over here. Total of 3,000 of these contracts, and you'll see the volume is greater than the open interest, and also down at the 72, right? So that's, they sold the 72s. This is also greater than open interest. So let's take a look at it. They sell that, and then they bought the 60s. And when we analyze this trade, you'll see that this is a bullish call spread. The current price at 56.96. As it goes up, this purple line will be above that zero profit loss on the y-axis. Okay, and likewise, if it drops, it will be at a loss. Also, if it doesn't break this point here at around $62, in just 2 days, it will also decay. So for example, right here at $60, you'll see the date showing a complete 100% loss because it decayed. And so that is the risk of a trade like this, although it is has a higher reward, but the risk is also higher. You'll see that the theta decay is -75, very high with this 2-day trade. And so we don't want such a large risk, and so we did a different trade based on these unusual options. And this is what it was. For the April 28th, what we did was we sold the 57 strike puts. You'll see our position there, and then we bought the 54 strike puts, creating a bull put spread. And by selling this, we are collecting a credit, and so we're taking advantage of the volatility. Also, we want to sell a put option or a put spread right before earnings, because we know it is going to contract, and we know that right now volatility is higher than usual. Keep in mind, this trade requires 300 buying power because it has a $3 wide from 57 to 54. If you don't want to use $300, you can use $200 by buying the 55 strike puts instead of the 54. Or you can buy the 56 strike puts instead of the 54 and then sell the 57, and that only creates $100 buying power, because it's only $1 difference. So depending on how much buying power you want to put or use up, if you wanted something more, you can go out farther and use more buying power as well. So that's a way to kind of adjust this. And so let's analyze this together. You'll see then we are collecting $1.44 for this trade. And so then we take that credit and we're going to buy the May 19th and we're going to buy a call spread here. So we're going to buy the, you'll see here the 65 strikes and also the 70 strikes. We're going to sell the 70 strike calls. And so because the other trade is the unusual options has this belief that it'll go up between $60 to $72. We're going to pick something in between that. And so what happens is this trade now, this is our trade. It's a four different types of options, four-legged options trade. And you'll see it's also bullish as the price goes up. And it will be profitable because it is above this zero line. And even if it doesn't move, it will be profitable because it will start going up towards the positive theta decay. And so that's why you'll see here our theta is actually a positive 9. And so that's what we like about this trade. And also minimal vega, so not much vega volatility risk. And also our break even is actually below at 55.7. So by expiration on April 28, this stock can drop to 55 and we will not be at a loss. And if it does drop, our loss is reduced. We can start taking it off before it hits the blue line, which is more losses. It will be following this purple line, which is reduced loss. And so that is why we like this trade. It doesn't have such a high theta decay. And if this trade, that based on these unusual options, was accurate and their prediction was accurate, this stock should be above 62 in 2 days. And so that's what we are thinking based on these unusual options. The Vega you'll see here is also pretty low, 0.97 on these unusual options. It's same as our trade, very low, so we don't have that volatility risk here. And so if it does break that 62, you'll see here it is also profitable. And so yeah, hopefully you learned something here on this video, and we think Roku will go up. And if it doesn't, we do have a way of minimizing our risk because we sold sold options, and it should hopefully break that 62 level. And if it doesn't, our trade is actually profitable all along as soon as it starts. Even as we said, if it's as long as it's above this $55 price, it will be profitable on our trade. So that is sort of our idea on this trade. Yeah, if this was helpful, please like, hit that thumbs up, and subscribe if you haven't. And we will be monitoring Roku after hours. Good luck, everybody.